Well, hey everyone, it's Duffeck with the new real estate team at eXp Realty in Austin, Texas. And today I am here with Alejandro Juarez. Am I saying that right?
You are. That's actually pretty good.
Okay.
Not bad pronunciation there.
Well, so today, Alejandro, we have a couple quick questions. Our topic is going to be about down payment assistance programs. That's one of the questions I've been getting a lot today, or a lot recently from my clients. And so, first of all, tell us a little bit about what down payment assistance programs come to the top of your mind that might be available out there for people to take advantage of.
Yeah, I mean, the first thing with down payment assistance programs is going to be that you have the opportunity to put a client into a loan where they can skip paying the down payment, right? So a lot of the times you'll hear a down payment assistance loan be called a zero down program. And essentially what it means is that we are going to take care of putting the down payment and build it into the loan itself. So there's a lot of flexibility because it doesn't have to be just the 3% that's usually required. They can get up to 5% worth of assistance. So if you have a loan that's $200,000, that client can get $10,000 worth of assistance that would cover not just the down payment, but it would even cover a lot of the closing costs. So we have programs that can get pretty darn close to covering almost all of the fees associated with purchasing a home. It's not exactly every single dollar and cent, but it's pretty darn close.
So what does a buyer need to know about a down payment assistance program before they get involved? Are they rigid requirements to be able to get one of these? Do you have to have spectacular credit, all of those things?
So the credit issue's first off really important because you don't have the same flexibility that you would with a normal loan. You have to have at least a 620 credit score to qualify for a down payment assistance loan. And then the other aspect of it is that you have to fit certain income requirements. So you can have a higher income, but it can't be unlimited. I think in the Austin Metroplex area and in general Central Texas, I want to say the income limit is about $93,000. So as long as the income doesn't exceed that amount, you can qualify for a down payment assistance program, and it varies from county to county. So those are the first things that I need to look up from the buyer to find out whether they fit. As a buyer, the most important thing that you want to think about is whether or not that loan program fits your needs. At the end of the day, you want to have a comparison of what does a normal loan look like and what does a down payment assistance loan look like, because they're going to be very different. There is a saying that I like to tell all of my clients, and for some people may like it or not, but the truth is that there's no such thing as free money. Down payment assistance programs come with a trade-off, and that is generally that the interest rate is going to be higher with a down payment assistance program than it is with a regular program. So what I want is for my client to be informed about that. This is what a normal program would look like. This is what the DPA program would look like. Does that look like something that would work for you? Does $10,000 in assistance compensate for the fact that you're going to have a higher interest rate? For the clients that I've put into those loans, they love them. They are more than happy to take that trade-off because it allows them to secure a home. It allows them to purchase that home and to move their family in and to be able to live that American dream. And then down the road, if they want to refinance back into a regular mortgage, they can do that.
Are there usually prepayment penalties if they want to pay the loan off sooner to avoid that interest?
Great. Some of the down payment assistance programs do have what they call a recapture tax. So if you have used something like an MCC credit to have a credit towards your taxes and you sell the home back within a certain amount of time, then there is a potential to have a penalty or to repay that tax that you'd saved from that program. Some of the down payment assistance programs do not. So the one that I favor the most tends to be TSHAC. TSHAC allows you to provide that assistance in the form of a grant. So that person isn't required to repay that loan or that grant outside of 6 months. As long as they stay in the home for 6 months and then refinance, they don't have to repay that back. And generally speaking, nobody's selling their home inside of 6 months. So for the most part, people are okay. Right. But then there are other loan programs that are not grants. They are loans that are attached to the bigger loan. And eventually at some point, they will have to be paid back. They're usually zero interest loans, but they are loans that get attached to the total balance.
Now, as far as the type of person that you see taking advantage of these loans, for example, I know I brought you a client not too long ago that didn't necessarily need help with his down payment assistance. He had some cash, but he was able to take advantage of the program anyway. Are there like maximum income level requirements and things like that, or who would be a good candidate for one of these loans?
Yeah, so in that case, it worked out really perfect because that client's income was right around the limit for that county where he was purchasing, and he just so happened to have a huge amount of savings. He definitely did not need to use that program, but in his mind, the down payment assistance program was a tool for him. It was a tool for him to be able to purchase a home using the funds from the program. He was using it as a primary residence, so he fit all of the parameters, saved money, out of pocket, kept all of that money in his savings, and then down the road will likely refinance or sell the home a couple of years from now, who knows? But he used it as a tool to be able to save money and keep it in his own savings. It was brilliant. And to be honest with you, like I told you earlier, I've thought a lot about whether I would use the down payment assistance program myself. And really that's the one limitation, is that it needs to be used as a primary residence. And in his case, he was moving into that home and he was planning to live in that home. But it was a brilliant move, for him.
Awesome. Well, these down payment assistance programs are ever changing, guys. If you or anyone you know is thinking about buying a home as their primary residence, and whether or not you just need a little bit of help with the down payment assistance, or if you're coming with the investment mindset that you're going to actually leverage some cash to get the deal done, be sure to reach out to Alejandro. He's awesome. He'll guide you all the way through, and we'll actually have a link on our blog page and off of this video where you can reach out to him. But in the meantime, if you or anyone you know looking to buy or sell a home, Kurt Duffeck with the new real estate team at eXp Realty. Thank you. We'll talk to you soon.
Bye.